Hello traders, Gary Wagner here, just about 12:30 in Honolulu, 5:30 in New York. It is Wednesday, January the 3rd, 2018, and this is the Daily Report for Gold and Silver. An incredible volatile day in the precious metals markets, resulting in a slightly lower market on the day and in essence unchanged. Gold closing at 1314.5, puts down about $1.60, but that's after trading to a higher high than we have seen this year, as well as a lower intraday low coming in at around 1309. We'll cover that in detail, of course, when we pull up our technical studies. Silver off about 3 cents, 1717, and that in light of a stronger U.S. dollar providing headwinds for the precious metals markets, making them harder or more difficult to move up about 0.3% at 91.88. And then there's the risk on environment, so prevalent, with the NASDAQ closing at a new all-time record high and the S&P 500 as well as the Dow moving into unseen territory. Dow 24,922, up almost 100 points on the day. Standard & Poor's higher, and 7,065 on the NASDAQ, up 59 points, but it is a new all-time record high. Bitcoin trying to find some support at roughly the $15,000 area, 15,080 CBOE, that's current fixed price, and the CME's Bitcoin futures contract at 14,990. Price action in the gold market was certainly interesting today when immediately following the release of last month's FOMC minutes, we had a quick and decisive knee-jerk reaction with a quick round of profit taking the market from current pricing, which was at about 1316, down to an intraday low of 1309, that in a period of 20 minutes, only to have a substantial and pretty quick recovery over the 90 minutes that followed. Now, when we look at our daily candlestick chart, it's not as evident what kind of swings we saw in terms of market pricing, and we'll pull up a 10-minute chart in a second. But the reason that we want to focus on this particular chart and what it might be indicating is we've had a long and sustained rally as the market came off of these lows mid-December at 1238. At any point, we could see a round of profit taking come in and pricing going lower. It is for that reason that we have consistently moved our stops up. Our current stops are sitting just below $1,300 per ounce. This is the first day in which we've seen any kind of a red candle, and that fact alone clearly warrants our attention. This particular candle right in here could easily turn into some sort of variation off of a dark cloud cover or even a three-river evening star. It is for that reason we want to watch this market closely. However, I did find today's recovery most interesting. And the best way to view that quick sell-off and recovery is to look at a 10-minute chart. That's exactly what we've put up on the screen in candlestick format. We can see that the minutes were released right here. Comes in at 9 o'clock a.m. in Hawaiian time. We can see that within the first 10 minutes, the market moved in essence from about 1318 down to about 1312. The following 10 minutes would take it to these lows at 1309, and over the next 90 minutes, that's 9 candlesticks, we saw the market recover pretty much to the same price point that it was sitting at before the minutes were released. Since that time, we have had this market under very mild pressure, currently trading off about $1, $1.20, and fixed at 13.15.10. My recommendation, of course, is to maintain our current long position, maintain our current stops, but our stops are low. They're at 1,300. If we see this market come under pressure, we might want to take that stop to the market if we believe that some sort of a correction is imminent. But as of this moment, we haven't seen the technical evidence to support that theory. And traders, we had similar action when we look at the other precious metals, specifically silver. We can see that silver had been trading higher going into the release of minutes again, which corresponds to 2 o'clock p.m. Eastern Standard Time. First 10 minutes, second 10 minutes, we form our bottom here, and then we have a recovery. Now, the big difference that I'm noticing with silver is that the recovery in silver didn't come back to where the sell-off began. We can see the price action took us about 2/3 of the way back, but prices began to drop at this price point, $17.25. Currently silver at $17.17. And as you know from yesterday's show, for those subscribers trading silver, we recommend stops should currently be at around just below $17 per ounce. And traders, lastly, I do want to take a quick look at Bitcoin. This is the CBOE single Bitcoin futures contract, down $85, $14,970. What's most interesting, we talked about the recent extreme volatility in the market, and we focused on that over the last couple of days. What I'm noticing today that's quite interesting is for one of the first times we actually see the market trading in a defined and narrow trading range, I believe attempting to see if it can find some support at the current lows of these candles, which sit at around 14,800. We're just $30 shy of 15,000. This could be a level in which Bitcoin is looking to find support before moving to higher pricing. That would be my best model to look at currently. Traders, as we saw in our short-term technical studies, the way the market sold off immediately following the release of the minutes and the subsequent recovery, what we can say is that traders are focused on this immediate set of events rather than their perception as to what the Fed will do with monetary policy further on down the road. That's why we saw it sell off in a knee-jerk reaction, but the recovery to me was the most interesting part of today's trading activity. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.